In this video, we are going to talk about Berkshire Hathaway stock analysis. So before starting this video, please like this video, and subscribe to our channel for the future updates. Let's start. Warren Buffett is generally regarded as one of history's most successful investors. Investing in Berkshire Hathaway, his business, is one way to share in his success, BRKB. The stock of Berkshire Hathaway has cleared a buy zone, but is it still a good buy for you? Let's take a closer look at the ultimate Warren Buffett stock's fundamental and technical results. Berkshire Hathaway is a conglomerate that controls a number of well-known companies in the United States. Geico, Duracell, Dairy Queen, Fruit of the Loom, and railroad operator BNSF are all wholly owned by the company. Perhaps Warren Buffett and his top lieutenant, Charlie Munger, are well known for using Berkshire Hathaway as an investment tool. The organization holds large stakes in American Express, AXP, Coca-Cola, Co., and other heavy hitters, following their value investing philosophy. However, in recent years, the concept of a Warren Buffett stock has changed. Warren Buffett is a major airline investor, including Delta Airlines, DAL. However, he was left to regret going against his long-held beliefs about the industry's lack of profitability. The decision backfired when airline stocks were decimated as a result of the global coronavirus pandemic. Berkshire Hathaway has been pouring money into technology under the direction of investment managers Todd Combs and Ted Weschler. It has significant stakes in both existing companies like Apple, AAPL, and younger companies like StoneCo, STNE, a Brazilian payments firm, and Snowflake, a new tech IPO, Snow. Berkshire has bought up an interest in Amazon.com, AMZN. Buffett snaps up Berkshire stock. Berkshire Hathaway announced in its earnings report that it had purchased an additional $6.6 billion worth of its stock. It follows a year of record repurchases of $27.4 billion. However, this was down from the $9 billion it had spent on stock in each of the previous 2 years. Berkshire Hathaway stock has been one of Buffett's biggest acquisitions, despite his history of avoiding repurchases. Berkshire's successful equity repurchases stand in stark contrast to the investor's M&A transactions before and after the 2008 financial crisis. Although he has been a skeptic of stock repurchases in the past, he described his change of heart in his most recent annual letter to shareholders. He wrote, "The math of repurchases grinds away slowly but can be strong over time. The procedure provides investors with an easy way to own a growing portion of exceptional companies." In 2018, Buffett's rules for buying back shares at Berkshire Hathaway were relaxed. Investors have been clamoring for further repurchases as Berkshire has been steadfastly conservative on M&A in recent years. Warren Buffett funds media deal. Berkshire Hathaway is a major backer of EW Scripps, SSP, acquisition of privately owned cable network Ion Media for $2.65 billion, which was announced on September 24. Ion Television, the flagship of the latter company, is a top 5 general entertainment network in the United States. To help finance the offer, Warren Buffett's company is buying $600 million in Scripps preferred stock. On the press, Scripps stock soared. Berkshire will also obtain a warrant to purchase up to 23.1 million additional shares at a price of $13 each. This amounts to a $300 million incremental investment. The common shares of Scripps are currently trading for more than 21 cents each. Berkshire Hathaway coronavirus exposure. Berkshire Hathaway is a conglomerate in its own right, as well as an investment vehicle. Railroads, infrastructure, and electricity are among the segments in which it has an interest. The coronavirus shutdowns and major economic recession have affected those markets, as well as other, real economy, companies that are Warren Buffett staples. They can, however, prosper as the economy recovers. Geico, the second largest auto insurer in the United States after State Farm, is owned by Berkshire Hathaway. Currently, states like California are requiring insurers to include partial premium credits or refunds in lines like private passenger vehicle insurance. Berkshire Hathaway also operates BNSF Railway Company, North America's largest freight railroad network. During the pandemic, rail companies like Union Pacific, UNP, and CSX have seen their company suffer. However, business is picking up again for rail operators and other transportation firms. Other wholly owned companies, such as Dairy Queen and the multi-level marketing firm Pampered Chef, suffered during the coronavirus limits, which are now lifting. Berkshire Hathaway stock technical analysis. According to MarketSmith Research, Berkshire Hathaway stock is approaching a profit-taking zone after breaking out of a flat base. The best time to buy was at 235.09. After a test of the 10-week line, shares offered a follow-on buy point around 246 in late March, but are now extended from her as well. The stock of BRKB has been deviating from its 50-day moving average. This is encouraging news for stockholders. Since mid-March, the relative strength line of Berkshire Hathaway stock has been improving. In 2021, the BRKB stock is outperforming. It has returned about 21% so far this year, outperforming the larger S&P 500, which has returned less than 11%. It now has an IBD composite rating of 76 out of 99. Although this isn't perfect, it's been slowly getting better. It is now among the top 23% of stocks tracked globally. EPS has been increasing for the past 2 years, indicating that earnings are improving. However, earnings have only increased by 5% on average over the last 3 years, owing to coronavirus pandemic lockdowns. Investors can look for companies with average EPS growth of at least 25% during this time span, according to the Can Slim scheme. Wall Street is growing more bullish about Berkshire Hathaway's future earnings growth. Annual earnings are expected to increase 22% in 2021, before slowing to 8% growth in 2022, according to analysts. Berkshire Hathaway earnings improve. Expectations of $2.57 per share. It made $7 billion in operating profit, except some investment performance. Last quarter, the conglomerate's overall revenue was $64.6 billion, which was also higher than analysts predicted. The firm's stock market dealings have resulted in significant gains, with revenues rising by $4.69 billion last year. The firm emphasizes, however, that gains and losses in any given quarter are mostly meaningless. This is consistent with Buffett's long-term investment strategy. Analyst backs Berkshire stock. With a price target of $295, CFRA analyst Catherine Seifert rates BRKB stock as a buy. She brought up the firm's latest earnings report, which she described as mixed. Despite a 13% decrease in investment income, results showed a doubling of underwriting profits and a 12% increase in rail, energy, utility profits, she wrote in a May 3 research note. We welcome the 33% increase in energy revenues due to acquisition contributions, but rail revenues fell slightly and insurance premium growth of 4.3% lagged peers. Despite this, she believes the stock is actually fairly priced compared to historical levels. Changes may also be on the way, according to the analyst, once the company's iconic CEO retires. We are disappointed that climate change and diversity proposals were not accepted at the annual meeting, she said, and believe that this raises the possibility of activism in the post-Buffett period. Is Berkshire Hathaway stock a buy now? Although Berkshire Hathaway's stock has lagged the S&P 500 index since late 2018, it has outperformed the index by a wide margin in 2021. Berkshire Hathaway's stock, on the other hand, has moved far outside its most recent buy zone. Investors who are interested in the stock may want to add it to their watch list and wait for a new buying opportunity. Although its composite rating is still unsatisfactory, it is improving. This makes it a stock to keep an eye on for investors looking to add a well-established stock with a diverse portfolio of companies to their portfolio. However, it's important to note that Berkshire Hathaway's earnings growth has been modest and erratic after a late 2018 burst. While Wall Street expects Berkshire to increase its earnings per share in 2021 and 2022, it is still below the rate sought by Can Slim investors. At this time, Berkshire Hathaway stock is not a good buy. Those interested in buying the ultimate Warren Buffett stock should keep an eye on it and wait for a new base to form. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.